I got some new office chairs right there. You guys like those? Oh, and I got a new office storage thing as well. That's not what we're going to talk about here today. We're going to talk about seeing both sides. As you guys know, we always like to see both sides in terms of the market, meaning respecting that you have an opinion of say, an asset going in one direction, but that you also need to be aware what are the risks. And so I remain quite cautious, broadly speaking, on the economy, but I did want to show you guys a couple of charts, basically looking at banking stocks. They just reported earnings, some of the large ones. But even though the numbers weren't so amazing on a forward-looking basis, the stocks remain rather resilient. And to me, that's interesting. There's a sort of couple levels of why that's interesting. The simple level is from a charting perspective. The second level is really more in terms of what that means, what it might signal what the Fed might be doing. And I think basically the Fed probably needs to cut rates more in order to steepen the yield curve, in which case these stocks could really start to run. Having said that, let's take a look at the charts. So what we have here is a very simple chart of an index or a ticker symbol called BKX, and it represents large cap banking stocks. And so basically what you can see here is this resiliency of stocks basically making another or a first higher low here in October versus the lows in August. Now you can even look at this in a ratio basis, which is something I always talk about to clients. You take this, and I'm going to say divide this by, say, the S&P 500. And then the chart looks like this. And here too, you can see this ratio is the relative chart. So here the banking stocks are acting or starting to act relatively better than the S&P 500. And you can see, one could do some technical analysis here as well. That's just part of the analysis, but you can see here too, we are kind of coiling up and potentially, starting to move up here. But it's not just large cap banking stocks. You can even look like things like regional banks. They're displaying a similar pattern, very much like the large cap banking stocks. And so here too, there is definitely potential for these things to move higher. Now, they haven't moved higher yet. They haven't broken out yet, so I want to be very clear. But that is something that I want to be mindful of, because the banking sector, or the financial space of the S&P 500 is the third largest sector of the S&P. So the largest tends to be technology, followed by healthcare, and then you have the financials. So if these things start to participate and show us some leadership on a more just, on a longer basis than just for, a week or two, then, one has to really rethink this idea that stocks can't move at least a little bit higher when it comes to the S&P 500. And remember, stocks, largely speaking, are basically trotting sideways for the past, more than a year and a half now. The S&P 500 is, even though we've had big ranges. But if we start to see some leadership out of financials for the right reasons, then we could see some more upside. So anyway, BKX is the ticker symbol for the large cap tech stocks, large cap financials, banking stocks, KRE, the small ones, and just something I'm watching. Hope it helps. If you like it, give us a thumbs up, like, and subscribe. Take care.